Welcome to Come Learn Forex. In this video, we will be having a look at currency pairs. Please read the following disclaimer carefully by pausing the video before moving on. We will look at trading pairs, what they are, what are the different types of pairs in the Forex market, how different types of pairs move, and how to choose the best currency pairs to trade. So let's look at what a currency pair is. It is the rate of exchange between two currencies. In this example, we will look at the currency pair GBP-USD. In the following example, GBP is the base currency and USD is the quote currency. This means that for 1 GBP, we will get an X amount of USD, which varies according to the ever-changing exchange rate. Now let's look at what types of Forex pairs there are. First, we've got the major pairs. These are the pairs with the most volume in the foreign exchange market, as a huge percentage of the transactions are done within them. These are Euro-USD, GBP-USD, USD-JPY, and USD-CHF. Next, we've got the commodity pairs. These are often regarded to as majors, although they're not exactly major pairs. They're instead linked to commodities such as oil, gold, or other valuable exportable goods. These pairs are AUD-USD, USD-CAD, and NZD-USD. Following that, we have the exotic pairs. They're extremely volatile due to the less volume exchange there, and as a result, they could move very unpredictably and have massive spreads. These are pairs such as GBP-SGD, GBP-NOK, USD-TRY, USD-HUF, USD-ZAR, etc. Last but not least, we have the minor pairs, which are also referred to as cross pairs. These are any pairs not directly involving the USD. Most often traded are Euro, GBP, and JPY. Examples of these pairs include Euro-JPY, Euro-NZD, GBP-CAD, CAD-JPY, CAD-CHF, GBP-JPY, GBP-NZD, etc. Next, let's look at how different Forex pairs move. There are slow pairs, such as Euro-USD, which don't tend to move more than 100 pips a day. It can happen, although it is not very likely. Following on, we have fast pairs like GBP-USD, which tend to move more than 100 pips a day on an occasional basis. You may see it happen, say, once or twice a week in normal market conditions. Lastly, we've got volatile pairs like GBP-AUD, which tend to move more than 100 pips a day on a regular basis. It is also worth noting that with the ever-changing market environment, in volatile times or times of unpredictability, pretty much every pair becomes a volatile pair. First, it is important to get a feel of each. See how well you do trading a slow, a fast, and a volatile pair, as every trader has their own preferences in regards to their ideal of volatility. Next, make sure that the pair you choose to trade has an active market during the times you want to trade it. For example, trading AUD-NZD during the London session would not be ideal. Another factor you want to weigh in is experience. A trader would not reasonably expect to do well in a market in which the trader has never participated. This is why it is essential to first master trading one pair before moving on to more, as every pair, just like every trader, is different. Lastly, linked to what I've just mentioned is familiarity. It's important for a trader to be familiar with how the chosen market to trade would generally behave and have a thorough analysis of all possible aspects. This again reiterates the importance of mastering one currency pair before moving on to eventually add a few more to your portfolio. If you have enjoyed this Forex related content, please do not forget to like and subscribe. Also, comment below on what you would like to see next.